Hi everybody, welcome back to Ox Talks. It's Friday, January 19th, 2024. Hope all of you are having a fantastic day today. Hopefully closing out the work week productive, in better shape, more focused. We talk every day on this channel about what we can all be doing each and every day to make ourselves better, to make ourselves more resilient, both financially and from a physical fitness perspective to what is unfolding with the economy and with the moral and social fabric of this society, which continues to erode. I want to start by thanking each and every one of you for, as always, being here today, watching these videos. Please subscribe to my channel. Means a lot to me. Please hit the like button. And please share the videos with as many people as you can reasonably do, family, everybody that we talk about, coworkers, colleagues, so that they can hopefully start to open their eyes, if they're not already doing so, as to the reality on the ground. There were several articles I saw today that I thought were worthwhile sharing with you. But I wanted to start by just addressing real quickly the run-up. If you didn't notice today, the stock market across the board ran screaming higher. The Dow Jones finished up almost 400 points up. The S&P 500 finished up at an all-time high. And the NASDAQ put on a gain of like almost 1.75% or 255 points. I saw Bitcoin bounce back a little bit. In this climate where the 10-year continues to go up, the market is rocking higher. Gold right now is sitting about $6 or $7 up on a per ounce spot price. So that's interesting to see. But what caused these markets today to go higher? I was combing through the CNBC, combing through the market, insider, the zero hedge stuff, and I can't find anything. I will address one article about the job cuts from Wayfair. But look, the markets across the board went higher. You're seeing tech run higher. You're seeing, all of the blue chips run higher. So what is it? I think this just comes down to FOMO, the fear of missing out. A lot of it's algorithm trading. We know there's no baseline fair market value in these markets anymore. It's one big casino. We know that the fundamentals of these companies have nothing to do with this anymore. Many companies are zombie companies anyway, not even running in a cash positive situation. So anyway, I guess if you're in the market, you had a good day today. I'd be very careful about a rug pull being orchestrated for next week. Again, I'm not giving you financial advice or stock advice, but it always seems like they get everybody sucked in, and then all of a sudden, the rug gets pulled. So be careful. Let's talk about some news stories. The first one, and these are all CNBC today. December home sales slump to close out worst year since 1995. It says sales of previously owned homes fell 1% in December, compared with November, to 3.78 million units on a seasonally adjusted annualized basis. According to the National Association of Realtors, sales were 6.2% lower than in December of 2022, marking the lowest level since August of 2010. And go back to August of 2010 and look at what was going on with the housing market during those years, following the GFC and the market collapse as well. So we are back in that same territory again. It says full year sales for 2023 came in at 4.09 million units, the lowest rally since 1995. It's almost 20 years ago. It's more than that. It's 25 years ago. So we are having to reach back, decades here to find a time where the home sales were this bad. It says homes stayed on the market longer in December at an average of 29 days, up from 25 days in November. The share of all cash sales rose to 29% from 27% in November. Individual investors who make up a large share of all cash sales bought 16% of homes, and that was down 18% in November. It says first-time buyers are still struggling, making up just 29% of December sales, down from 31% the year before. Historically, they make up 40% of the market. So first-time buyers are still priced out. And the statistics are staggeringly bad. Next article I saw says consumer, and this is, okay, so we have one article coming out saying December home sales are as bad as they've been going back decades. And then you have this article, consumer sentiment surges while inflation outlook dips, University of Michigan survey shows. This says the University of Michigan survey of consumers showed a reading of 78.8 for January, its highest level since July of 2021. So if we were to believe this, the consumers are as exuberant and positive about their personal situations and about the economy as they were in going back to July of 2021. This is on a 2-month basis. Sentiment showed its largest increase since 1991, said Joanne Sue, the survey's director. So again, now we're going back to 1991 to find a time when consumer sentiment was this positive and this great. So, comment down below. What do you guys think about consumer sentiment? We have credit card debt at an all-time high. We have defaulting mortgages, coming on, increasing. We have inflation at highs, food costs at record highs. So, how do, when you see this kind of trash to come out on the heels of the article that says that home sales are collapsing, and on all the other data points that I bring out, and a lot of us bring out every day, it's amazing to see this kind of spin being put on the reality. I'm not hearing a lot of consumer exuberance right now. I am hearing a lot about people pulling back and trying to tighten in their spending because they simply don't have the wherewithal to support the lifestyles that they were trying to support, maybe even post-pandemic. Those things have all changed now. So where and how is consumer sentiment at these record high numbers? I'll tell you something, it's not. Last article today, we continue to talk about layoffs, reduction in headcounts, reduction in sizes of workforce of these companies. So this morning, news came out. Wayfair says cutting 13% of its global workforce as the digital home goods retailer continues its efforts to trim down its structure, cut out layers of management, and reduce costs after going overboard, it says, with corporate hiring during the pandemic. It announced on Friday, today. The company plans to lay off around 1,650 employees, including 19% of its corporate team, with a focus on people in management and leadership positions, Wayfair said. So, these are the executives. These are the C-suites, the middle and upper management people. So look, nobody's immune. If you're in a company where you think you're sitting real cushy because you've worked your way up through the ranks, and now you have a higher ranking title, I will tell you, you hear these kind of stories and you read this kind of stuff, and it becomes clear that when corporations decide that they're simply going to clean house, reduce headcount, some of the C-suite executives are the first ones to go, especially to eliminate redundancy. The article goes on to say shares of, and this is interesting, shares of Wayfair surged 15% in pre-market trading after the news was announced. And you would say, well, wait a minute, they're cutting 13% of their workforce. They're laying off 1,650 people. How is that good news? The reason why that's good news, discussed it before on this channel in prior videos. When companies do this, it sends a signal to the shareholders that the company is going to be cutting its expenditures, meaning they're going to have more cash reserves and they're going to be shoring up their balance sheets by having to pay less employees, less executives, less bonuses and other compensation. And so, again, what's the goal of a corporation? It's not to maintain a nice, happy work environment. It is to make profit for their shareholders. That's the bottom line. It's the only reason corporations exist, is to maximize return for their shareholders. They don't care about you and me. They don't care about whether or not you have any reserves to buy food for the family, to pay for repairs to your car, to pay for an unforeseen medical expense if you get caught up in one of these layoffs. They just don't care. So we talk about it every day. Going back to the theme I repeatedly bring up on this channel, I really suggest that everybody look at having a backup plan. We talk about backup plan in everything from food, water, prep, security, redundancy, but how about with regard to your income stream? If you are reliant on a paycheck from an employer, any kind of company, big, medium, small, you are susceptible to being laid off. Nobody is invincible from that unless you own your own business, unless you control, to the extent possible, your own income stream. You are your own boss. You pay yourself. You cut yourself your payroll check and take your draws. So if it's within your power, within your ability to start your own business, start your own side hustle, maybe even it's not even a 9-to-5 gig to start, but to have something in place that maybe will develop into a full-time career path for you or job and your sole source of income, but certainly as an extra layer of protection if you find yourself victim to one of these statistics. And we are seeing them rolling out at full speed here in the first 3 weeks of 2024. It says the layoffs come after Hasbro, Etsy, and Macy's all announced cuts to their workforce as retailers contend with slowing demand and an uncertain economy. We covered Macy's yesterday. So that's what's happening. So, and the CEO of the company says after each, this is the climate, this is the mindset. It's all about business. Here it says, quote, after each reduction, we have gotten more of our goals done faster. I believe we need to stay focused as a company on what committed small teams can accomplish. In many ways, having too many great people is worse than having too few, he says. With too few, you get a lot done quickly, but you may not get everything done that you want. But having too many causes inefficiency, coordination costs, and investments in lower return activities. So these companies that are top heavy, this is just the tip of the iceberg. So keep that in mind, everybody. Working on some files here today at the office, filing a bunch of stuff with the court. Met with my process server yesterday. Got a bunch of proofs of service back on some subpoenas, some lawsuits, things like that. So just doing some housekeeping here at the office today. I need to dig into preparation for this arbitration that's coming up here in a couple of weeks. I'm going to work on that file this weekend. There's no clocking out when you have your own business. It's 24/7. We know that, discussed it before. I'm going to be leaving in a little while to go get my workout in. I put in the title of the video yesterday to please get out of your, I didn't say please, I said get out of your chair. I discussed, even with me, I get stagnant during the day. I'm at this desk a lot, returning calls, emails, drafting documents. So it's important that all of us are mindful of moving during the day, getting that circulation going. Being stagnant and not getting your steps in is one of the worst things that you can do on a repetitive daily basis. So please consider that as part of your daily routine. Get a half an hour of walking in a day, even more if you can. Get some cardio exercise in. Strength training is super important as well. Work in some weights to the process, obviously based upon your physical ability. Taking into consideration any kind of limitation that you may have. But I think it's very, very important. The physical fitness aspect of this journey is as important as the financial aspect from my perspective. Suggest that you guys all do that. With that being said, I'll leave it right about 15 minutes. I may be doing a video with JB over the weekend. We'll see. We're discussing it, see if we can get our calendars coordinated. I may not be able to do the prep video I discussed for Sunday. We'll see, because we're supposed to be getting some rain here. I think 70% chance. If not, I'll get to it soon for sure. I promise. With that being said, again, thank you all for the feedback on the videos. I appreciate reading your comments, and to have a fantastic rest of your Friday and a start to the weekend. Stay safe. Bye.